The COVID-19 outbreak has strained global airlines to the brink, and in the United States, major carriers are scrambling to react to the unfolding pandemic.
We've seen a dramatic drop in demand that really the industry hasn't seen since 9/11.
The next few months will be ugly for the travel industry in terms of both demand and their financial performance.
The initial coronavirus outbreak caused a massive drop in air travel inside of China between January and February. As the virus has spread, both vacationers and business travelers have curbed their plans. And on March 11, 2020, President Trump announced that travel from parts of Europe to the US would be halted for 30 days, which later expanded to include Ireland and the UK. Airlines around the world scrambled to find a way to survive without passengers.
There have been discussions about whether to tell people not to fly.
It's the worst crisis to hit the air travel industry since the 9/11 terror attacks. Delta Airlines has cut its capacity by 70%. United Airlines has cut 65% of its capacity, and American Airlines has cut 50% of its capacity.
When an airline says they're going to cut capacity, that means they're going to cancel some flights. And that could be canceling frequencies in a route that has lots of frequencies in it, or it could mean stopping flying between two cities they've been flying before. Airlines talk about capacity as the number of seats they have in the air at any time, or really the number of seats they have out for sale at any time.
Internationally, Norwegian, SAS, and Lufthansa have suspended most of their operations, and more cutbacks are expected from other airlines.
The demand picture is worse than after 9/11. And we have no visibility as to when things are going to recover. On the range of possibilities, sure, there's a scenario where a couple months from now, maybe coronavirus isn't eradicated, but things are more stable and health authorities are changing their advice and people are willing to get back on airplanes. But, that at this point is the most optimistic scenario, months of disruption.
The U.S. Senate just reached a deal on a massive $2 trillion relief package to help with industries and individuals hit by the coronavirus pandemic. The airlines wanted $58 billion from the package, and the exact details on what ended up in the deal remain vague. What we do know now is that airlines won't be able to buy back stock or hand out bonuses to CEOs as part of the deal. And they won't need to pay back the direct cash grants they receive, though the government will take an equity share. The airlines must also agree to refrain from layoffs until later in 2020. Airlines run on tough margins, and regional startups go under every year. It is easy to see why the COVID-19 outbreak concerns airlines. In 2019 alone, 23 airlines closed shop, including WOW Airlines and Thomas Cook, and that's before the coronavirus pandemic. And in 2020, Alaska Airlines said it has seen 265,000 fewer bookings for March than in 2019. The impact to airline travel in China was rapid and vast. Flights dropped by more than 80%, according to the Civil Aviation Administration of China. The onset of quarantines inside China, starting in Wuhan, grounded hundreds of airliners. In 2016, 20 million travelers used the Wuhan International Airport. And Beijing, where an $11.4 billion state-of-the-art airport was just opened, ranks as the second busiest city for air travel in the world. Even in areas not quarantined by the Chinese government, citizens were reluctant to travel. Disease spreads when people are stuck in close proximity to each other, something airlines are infamous for. As the COVID-19 outbreak spread in the United States, planes began traveling with near-empty cabins as passengers canceled their flights. People were told to limit their activities and embrace social distancing. That's not so easy at 30,000 feet. Administration officials even recommended that those at the highest risk, such as the elderly or those with underlying health problems, not fly at all. All those flights being grounded has a ripple effect on the industry.
The challenge for everybody is nobody knows when this virus is going to be addressed, when it will start to abate, when people will feel more confident about flying, and importantly, when business travelers will return to the skies.
This isn't the first major disruption the airline industry has faced. After the 9/11 terrorist attacks, aircraft were grounded throughout the United States and no flights were allowed in or out of the country. Besides the immediate concern over stranded passengers, airlines took a massive financial hit. It took a $15 billion bailout from Congress to keep major airlines afloat. Another recent disaster for the airline industry was the eruption of the Island Mountain Glacier volcano in Iceland. When the volcano erupted, a massive plume of ash was released into the atmosphere, making the most efficient air routes between Europe and America unusable. The incident cascaded and slowed down global routes, as aircraft and passengers were stranded or redirected to much longer routes. The 2008 recession also caused a slowdown in air travel. One of the industry's most lucrative clientele, business travelers, dropped to all-time lows. During 2008, the U.S. airline industry lost just more than $5 billion.
To put it into context, after 9/11 in 2002, The industry had a big, lost 1.5%. I mean, in other words, air travel was down 1.5%. That was pretty tough. The Great Recession, we lost about 1%. This year we could lose 10.
Airlines are more than just a way to get from point A to point B. They are a point of national pride. In previous economic slowdowns, governments around the world have stepped in to prevent national carriers from going under.
The last time the government rescued airlines following 9/11, the government actually made money on that. It basically got a stake in these airlines and sold its stake years later at I believe about a $300 million profit, similar to the automaker bailout.
Besides getting bailouts and economic stimulus, airlines also take their own actions to survive sudden downturns. They cut routes such as daily shuttle flights between cities, and also long-haul flights with high overhead costs.
When you're in trouble, the first order of business is fly the airplane. Make sure you know how much fuel you have, where you are, where you're going, that your wings are straight and level. And that's kind of where the industry is right now. Okay, where are we? What do we need to do? And what that means is they need to preserve cash, as much cash as they can, which means they're canceling flights that would likely lose cash, but continuing to fly flights that are generating cash.
Some airlines have already grounded large portions of their aircraft and laid off staff in hopes of resuming operations after the pandemic has subsided. Airports and all the workers who make the day-to-day operations run will also be affected by the slowdown. And aircraft manufacturers like Boeing are looking for federal help.
Boeing was fortunate to be able to get through one major crisis that might have killed a lot of other customers. That, of course, the grounding of the Boeing Max. It was too big to fail. The candidates for that, a wider swath of the economy than it would have previously been. But the arguments Boeing would make is, look, Boeing is America's biggest exporter. There's no other company that exports more to the world than Boeing does. It employs, of course, a lot of people. And yeah, it's a producer of goods that are key to national security, no question about that. Again, a lot of other people certainly be in line, a lot of other people and companies for government aid.
The potential bailout is already facing some serious pushback from lawmakers.
United Airlines just announcing that they will lose money in the first quarter, not make money.
Boeing is suspending its production operations up in the Puget Sound area.
In normal pre-pandemic times, Boeing might have been a sure thing for a government bailout. But there are several other industries and sectors lining up for government assistance because of the coronavirus. The financial outlook for airlines just took a nosedive. And while the pandemic ranks as the biggest disruption in aviation history, it perhaps hit at an advantageous time for carriers.
9/11 happened on a Tuesday. By that Saturday, U.S. Airlines were laying off tens of thousands of employees. Our Continental, later part of United, went first. 12,000 layoffs, 20% of its workforce. And within a few weeks, 75,000 U.S. airline jobs were gone. This time, weeks into the crisis, U.S. Airlines, the major ones anyway, still hadn't laid off their first person, even though the capacity cuts this time have been far greater.
The golden age of air travel has left airlines with full coffers, especially American-based companies. The liquid assets of the major airlines and most of the regional players are in good shape. And unlike after the 9/11 terrorist attacks, there probably won't be a need for massive reorganizations of the major airlines.
I don't think of it exactly like 9/11, however, because after 9/11, the industry was forced to restructure in some really dramatic ways. Several airlines went into bankruptcy protection. Airlines closed hubs that didn't make much sense after 9/11. There were big changes for customers in terms of security and on the airplane, the door to the cockpit and the procedures on the airplane. I don't see those kinds of changes coming with this, at least not yet.
Mechanics, suppliers, and pilots for the most part aren't getting laid off en masse as of yet, and those that are hopefully only being laid off temporarily. It is expected that there will be a need for them shortly after the pandemic subsides. The problem with the pandemic is that no one really knows how long this could go on.
For U.S. airlines, look, if you could assure them that this is going to be a 2 or 3 month issue, I don't even know that they would be wanting government aid and taking some of the strings attached to that. Most of these U.S. airlines would be positioned to get through a month-long disruption. The problem is they just don't know how long it's going to go on, and to keep employing people, paying people basically to stay home indefinitely. they would quickly run out of money. That's a key difference between this crisis and 9/11.
Airlines are well positioned in the short term compared to previous downturns. However, the request for stimulus from the government indicates the industry is worried about how long this will last.
Airlines thought they were prepared for anything, and it turns out they were prepared for anything except this.